Meme stocks are back, and if you are an experienced stock trader, that can be an opportunity for you to make some money. And if you're inexperienced, more likely than not, it means you're going to get wrecked and you're going to lose nearly everything. Why should you trust me? Because I teach my 400,000 followers how to trade and invest in the stock market, and I don't sell anything. I'm fully self-taught. I've been trading for 13 years in my pajamas, investing for over 20 years, and my TikTok account really blew up a couple years ago during the first meme stock bull run with AMC and GameStop. It's also when I received my first death threat just for simply urging inexperienced traders to please be careful and consider taking profits if you got them. The first thing I noticed in your comment is you're saying having zero experience with stocks, how do you even get started with investing? This was on a video about Faraday Future Intelligence, some electric vehicle penny stock that no one's literally ever heard of until a few days ago when it started just ripping. There's a big difference between investing and trading. A stock trade is something that happens either in the period of a day or several weeks or months, whereas an investment is something that you plan on holding for 10, 20, or 30 years. A meme stock like Faraday Futures that was up over 400% today is definitely not the sort of thing you'd want to be investing in for 20 or 30 years. It's very speculative, it's ultra high risk. And this is unfortunately where new investors and new traders get absolutely wrecked. They get smashed because they look at a stock that's up 400% in a day and they go, damn it, I missed it, but it's only $1.65. If I buy it today, I'll catch the next 400% move. And that doesn't always happen. In fact, more often than not, it doesn't happen. And you end up buying at the tippy top and you become something called the bag holder. In other words, you're the guy who a week later, a month later, a year later says, I lost everything in the stock market because I watched some videos on TikTok and I didn't know what I was doing. I thought I was going to get rich and I lost it all. This is the 5-day chart for this Faraday Futures company that I never heard of. You could see it's all the way down here. It's 6 cents, it's 5 cents, whatever. And then it absolutely explodes in volume. And for a period of several days, it just rips. Now, this is when most people on social media are finding out about this stock. Right here, right where it's $1.20, $1.50, $1.60, and they're buying into this hysteria thinking it's going to keep going and they're going to get rich and everything in their life is going to improve and they're going to pay off their home and they're going to pay off their debt and they're going to pay off their student loans and everything's just going to be fabulous. And they become the bag holder. They become the guy. Look, someone here bought it at $2.35. In fact, more than just someone. A lot of people probably rushed to buy here thinking it was going to go to $5 or $8 or $10. But it closed at $1.65, which means whoever bought it up here is either sitting on a massive loss or they've already sold and they've already taken a huge loss. Anything can happen with these stocks. We learned this during AMC and GameStop where they just kept going and going and going until they didn't. Experienced stock traders would probably have purchased somewhere here, right on the first sign of huge volume and a breakout to the upside. And they probably would have sold it somewhere here. Remember, the goal of a stock trader isn't to make all of the money, it's just to make some of it. Inexperienced traders, like I said, are buying up here, selling down here and going, oh my God, it's all gone. Now, like I said, this stock could return tomorrow and go up another 400%, or it could go down, and you don't know that. Nobody knows that. So it's extremely important that as a new investor, if you're going to copy a trend or you're going to do something like this, I would probably just sit it out. I did. I wasn't in this stock. I have no intention of getting into this stock. It is what it is. I'd rather not take the risk and roll the dice. If you're going to get into something like this that's already had an absolutely massive run, the first question you need to ask yourself isn't how much can I make if it goes to this price or that price. It's how much am I willing to lose? And there's the other category of traders and investors here who have no interest in the stock. They don't care if it goes up. They don't care if it goes down. Their one single objective is to hurt the hedge funds. I got news for you. I don't think these hedge funds really give a shit. Remember during AMC, 1 or 2 hedge funds got wrecked. We found out later that a majority of the hedge funds were also buying and trading GameStop and AMC and making billions and billions of dollars off of the retail investor hysteria. I'm sure they're doing the same thing with this. So if your objective is destroy the hedge funds, okay, fine, whatever, do your thing. If your goal is to make some money, I would be extremely cautious at a time like this. And it's very important to remember at the end of the day, there's a humongous distinction between investing and trading. I want to show you something really quick, and then I'm going to stop talking. If you've been following me on social media, which you might not have been, but other people might be familiar with this is my little pyramid approach to investing. And it works a little like this. The very top of the pyramid is high risk investments like this one. You only put in 5 to 10%. This is money that you are totally okay with losing. Up next is individual stocks, but there's a distinction because individual stocks also has to be high quality stocks. Now, if you're the type of investor who goes, I don't want to research, I don't want to learn, I don't know what's high quality and what isn't, that's okay. You can sit these two categories out. The most important thing is something called the 3-fund approach or the 4-investment approach. And it would be an S&P 500 index fund, which is the largest and the most boring investment you can have, but it is also the most time-tested and largely viewed as one of the safest investments, followed up by a tech ETF and a dividend ETF. And if you want, making it a 4-investment approach instead of a 4-fund approach, a real estate investment trust. Unfortunately, largely due to social media, I see a lot of new traders do the inverse of this, where they say, I'm going to start with the most amount in the highest risk because my life sucks, my job sucks, I'm drowning in debt, the economy sucks, inflation is terrible. I'm going to put every last dollar I have into this because some guy on TikTok said it was going to rocket, and I'm just going to hope for the best. This is not a strategy. This is a way to lose everything. You need to have a plan in mind, not only to take profits, but to cut losses. But most new traders, they do this first, and they go, oh, when I get the money, then I'll put it into the safe things. No, that's a great way to get wrecked. Most people who go all in on high risk walk away from the stock market going, the whole thing is scam, the whole thing is rigged, it's manipulated, I'm not going near the stock market, I lost everything. And you would have a much different reaction to going, oh, I lost 98% of my money. Oh well, because you only put in what you were willing to lose. I know I said I was going to stop talking. I know this video is over 7 minutes long, but there's one last thing that you need to watch if you're new to investing and you're thinking about becoming an investor or trader. I want you to go right here and you're going to click on the menu, which is right there, and you're going to find all of these resources and templates. My templates are totally free. There's no email sign up. Same with my free resource guide. This is all the links that I use to do my own research. It is totally free. This isn't a shitty version where I'm going to email you in a week and say there's a better version for $10. This dividend little article that I've written, because there's a lot of misinformation about dividends in the markets. But this free resource guide I'll show you. It's got everything, including my YouTube channel. My YouTube channel has playlists on investing, on trading, on technical analysis walkthroughs. If you're interested in trading, if you're not, no big deal. And you can see that I have every single website that I use for my own research. I cannot stress this enough. With stocks like this that have already had insane runs, it might just be better to sit it out instead of thinking you're going to capture it on the next 400% run. Please be careful when you hear content creators on social media saying, I made $10,000, $100,000. First of all, they're putting in a lot of money to make that money that you might not have. And second of all, you need to ask them how much they've lost, because a lot of people love coming out here saying they make all this money and they sell a course and they're going to teach you how to do it. But more often than not, when people come on social media to brag about their big wins, it's like the guy who wins $100 on a scratch-off lottery ticket after they lost $500 on scratch-off lottery tickets going, I want 100, I want 100. Did you though? You know what I mean? All right, that's enough. I'm gonna stop talking. Smash that follow. Thanks for watching. See you later.